Hello, chart watchers and Decision Point faithful. Welcome to this Thursday morning, July 23rd, Decision Point show with your hosts, Carl and Erin Swenlin. We are recording this on Wednesday afternoon, just so you are aware. All of our charts are up to date as of Wednesday afternoon, July 22nd. For those of you joining us for the first time, welcome to the show. And of course, for that group of Decision Point faithful, we welcome you back, of course. All right, so let's look at today's agenda. But before I do that, welcome in my father, Carl. How are you doing today?
Pretty good.
Pretty good, yes. Nothing new, really, huh? Yeah, okay, let's go. Index review and market bias. Of course, we want to go over what's going on in the markets. We did have a new signal I want to talk about today. We're going to talk about market breadth. There was some interesting activity on that earlier this week that Carl's going to talk to us about. We had some buy signal divergences that he'll also be discussing. And of course, we will also look at the dollar, gold, and gold miners. This is certainly a hot area of the market with the dollar failing now. And gold, of course, really breaking out. And gold miners are certainly enjoying that ride. Home builders. This is an industry group that has been showing a lot of strength as of late, and I did write about it in Monday's Decision Point Diamonds. And Carl and I are going to talk about it a little bit. It was funny. We got to the program to do our show prep, and I said, "Oh, I'm going to talk about home builders." And Dad, you said, "Hey, I'm going to talk about home builders." I thought, excellent. So we'll have some I think similar point of views, but some differences too. And then of course, that is going to lead me into the diamond of the week, which I did pick from the home builders industry group. So we'll take a peek at that. All right, well, where are our signals going? Well, before I do that, I wanted to welcome anybody who hasn't tried DecisionPoint.com reports to go ahead and try it out for a 1-week trial. Just subscribe to our bundle package, use that DP trial coupon code, and you'll get your first week for free. And we will not charge you if you decide you do not want it after 1 week. So no problems there. But I did want to let everybody know that the diamond reports that I do, they're going to be going through a little bit of an overhaul, and they're going to be a lot more expensive. I'm finding they take way more of my time, and the data and information that my subscribers to Diamonds get, they will even tell you, make them money. And so I think that it's time for me to charge for all of the time that I'm now putting into those reports. So I'm going to make them even better, but I recommend you go ahead and subscribe now, because anybody who has the much, much lower rate will get to keep that as long as your subscription is running. So just to add there. All right, so our Decision Point Scoreboards. Today, we actually got a new signal Wednesday afternoon of a long-term trend model buy signal. This is pretty much a golden cross of the 50 and 200-day EMAs, and that's what our long-term trend model tracks. So today, the Dow finally did give us that long-term trend model buy signal. You can see that the one NASDAQ 100 all came in with those signals a while back. The NASDAQ 100, of course, holding on to it for some time. And then we also got a PMO buy signal on the NASDAQ 100. Now, it came in on July 6th, and I believe it was on July 19th. I think that we ended up with a whipsaw sell, and then it came right back the next day to a buy. So I'm just leaving the date as of that previous one, because it really, the whipsaw I don't think is important enough to put the change on the date on our scoreboard. All right, the sector scoreboard, as you can see, a lot of green here, but also a lot of red. And interestingly, when we look in the long term, the red areas, real estate, utilities, energy, you know, these have been really beat down areas. We're starting to see a little bit of life out of the industrials, so I'll be interested in seeing what happens with that sell signal very soon. And as far as our intermediate term trend model, 20-day EMAs below the 50, while below the 200-day EMA, that would be energy and utilities right now. But I'm starting to see a little bit of a move, certainly in financials as well. Banks are starting to look a little more interesting.
I think utilities is on a buy now.
It is on a buy now? Okay, excellent. Well, I will update that chart. It wouldn't be a decision point show if I didn't have to update one of these signals. So, all right, let's go look at some charts. Of course, that's why we're all here. All right, so I'm going to start off with that Dow Jones new golden cross that gave us that long-term trend model buy signal that's finally coming in. You can see a lot of the Dow chart is a lot different from the other index charts that we're looking at, and I say that because we got this gap way back here at the beginning of the crash, the virus crash, if you will, and the Dow has not even come close to even testing that. No interest. It's just really not, despite all of this volume coming in, we're not getting higher prices. We still have a symmetrical triangle, which is a continuation pattern and does suggest an upside breakout because that was the rising trend came in before this formed. But certainly we're still seeing, while we're getting these signals, you can definitely see between these indexes sort of a different look. And I will show you why I say that. We're going to look at the 5-month candle here for the SPY. And again, so here's the gap resistance on the SPY. And you can see that it's been trying to get up there past it. Right now, it's struggling through the murky waters of that gap, trying to get past the gap and get that breakout to the upside. Of course, interestingly, when you look at the NASDAQ, I'll look at the NASDAQ 100 in particular, gap resistance, that's long past. We beat that out back in May for the NASDAQ 100. So you can see the strength that those growth stocks, the technology area has been very strong, but we are starting to see a little bit of faltering now at this top with the technology areas. So that would be my index review. And then I just really wanted to quickly talk about market bias because, we came up against this gap resistance. It seemed that we were ripe. We were coming up here, we failed, and it seemed that it was really ripe for us to have a decline. You can see even the VIX was telling us this. The PMO was still in decline, but the market bias, as we've been pointing out, has been quite bullish. And one of the ways that we look at market bias is through the new presentation, thank you, Dad, of our exclusive indicators, the Swenlin trading oscillator and the ITBM, ITVM. And what we do is we look at really how much green is on the chart. I think it really comes down to that quite simply. And as you can see, there's just been a lot of green. There's a bullish bias and the market, participants are in that bias. So we had a consolidation really instead of a decline on the SPY. And I think this is really one of the reasons why is we just still have a very bullish bias out there despite all of the everything.
It's not just the amount of green. There's also where it is sitting within the normal trading range. You notice I've got the dotted lines of plus and minus 400.
Yep.
When that yeah, then the ITBM, that's plus 200 to minus 200 normal range. And you'll notice that canted on the upper side of that range. So not just a lot of green, but the whole, there's not anything, no red going down to the bottom of the trading normal range.
All right.
See?
Absolutely. So this is, one of the things that, the bears have to contend with. And so we do keep a close eye on this. And, really, as I've been writing the decision point alert, even though I'm starting to see these Swenlin trading oscillators moving lower, it really hasn't affected price just yet. But it is something to be aware of that we're starting to see that negative divergence building on the shorter term indicators. Obviously, the intermediate term indicators continue to look pretty strong. But what are you seeing as far as the market breadth? Because I know you wanted to talk a little bit about that.
Yeah, I did. While we're here, though, I wanted to make the point that the importance of bias is by being aware of it when you're looking at potential bearish setups. If the bias of the market is bullish, it's your odds of a bearish setup executing favorably are lower than if the bias was neutral, say, or if
Mhm.
the bias was bearish. So
Exactly. You know, consolidation instead of a breakdown. You know, that's one of the things that you might see instead of, you know, when the bias is bullish.
okay, I wanted, yeah, this. Let me start with this one. On Monday, we had a kind of a weird day. That's this little where we did a nice white candle breakout there. Um, that was with SPY. If you looked at the um, RSP, which is the equal weighted version of the SP 500, it's closed down by half a percentage point. So, and also you notice that we had a net uh, declines on this on that day, and also net decline in volume. So uh, that's a little flaky,
Yeah.
but it's recovered, and I didn't see anything that flaky. But I thought I'd go back to the old timey version of breadth is the advanced decline line for the SP 500, and it's making new highs. Nothing weird on it. The problem would be that between this top and here, uh, it's um, it's a reverse divergence compared to these two tops. So frankly, I don't. When it gets that far apart, I don't pay a lot of attention to it. Just something to be aware of. But here you can see we did get confirming movement on the breadth and the price. Now on the advanced decline volume, we're not getting confirmation at all. Uh, this is confirming we've got these two tops, but moving higher when price volume is not backing it up.
Hmm. Yeah, it's interesting to see declining tops there on the volume line.
Right. And something I want to jump to, if you allow me.
Oh, of course.
Um, I I wrote an article about Apple this week and how it's uh, it's just getting too steep. You notice that historically Apple does these parabolic advances and breakdowns. Back here, the breakdown was 61% down, and here 43, 32, 39, 35. Uh, and they're kind of evenly spaced, but even though during this entire period, Apple was a sterling company, uh, it still has these times when it just chucks it for a while. And notice that the time between these two tops was about 15 months, where normally they're two or 3 or 4 years difference. Now what we have here, you can see it better in the thumbnail. Here's that uh, low straight up. It's vertical. It's not even parabolic anymore. It's not even coming up against but it's just totally vertical. So, I mean, watch out. This is a big stock. Obviously, it plays a big part in the Dow and in the S&P 500, the S&P 100, NASDAQ 100. So when it turns, and it will eventually, uh, and the steeper it is, the more dangerous it is. So watch out for that. Let me just take a peek at a shorter time frame so we can get a better look. There's too many notations there, you can't see what's going on. And they're so crushed together. So here we have, I don't think we're going to go to the end of the year before we see it backing down again, another dip of 30, 40, 50% even. It doesn't mean it's the end for Apple, but it's still it's not a,
I mean, I guess the point is too, I mean, a lot of people will hold it. It's just, I mean, a lot of people I knew during the virus, you know, the March crash, well, I'm just going to hold it. It's going to come back and then I'll be back where I was. But, you know, honestly, why hold into the those
right,
declines?
right.
You're going to make a lot more money if you don't. So it's really just a warning that, you know, maybe get a tighter stop on there. Start using a trailing stop maybe.
Plan some kind of a hedge, but you know, yeah, um, how you handle something like this is really an individual deal. You know,
Yeah.
some people don't want to deal with the taxes, so they'll hold it. And if you bought it back, Apple back in the 90s, well, you're not worried at this point.
It's true. Yeah, yeah, absolutely.
Did you want me to go into the home builders?
Yeah, go ahead and do that. I'll probably revisit it because it does, my diamond is from that area. The only other thing I wanted to look at was, of course, dollar gold and gold miners. So,
Yeah, we got plenty of time.
mm-hmm.
Um, yeah, here's home builders making new highs. And this is just, to me, it's an astounding um, fact that this is happening because this morning I heard on the business channel that last month, 33% of people did not pay all of their rent or mortgage payment. 20% people paid nothing. This is the kind of situation you're looking at while the home builders are going straight up. So uh, just
Right.
keeping this in mind, it makes well, it's annoying because if you go back and you think about the 2000 bear market, 2000 2002 bear market, people the tech stocks lost 80% during that period, and but it was a healthy flushing out of the market. Government didn't come in and rescue all the people that were holding tech stocks. They ate it. You know,
Mm-hmm.
they took their losses, and if they got back in, well, they're doing just great today, aren't they? But
Right.
but the point being is that we didn't get any government interference on helping those people deal with their losses. With the housing market in 2008, uh, when it crashed, um, we interfered with low interest rates. And I got to thinking about that this morning, how low interest rates affect the prices of houses. Uh,
Mm-hmm.
you bought, if you got a $300,000 mortgage, you're at 3%, your monthly payment, P&I, would be $1,265 a month. The same $300,000 mortgage at 7%, your monthly payment is $1,996 per month, which is the difference of $731. And in some parts of the country, you can get a $300,000 house for that. You know,
Yeah, absolutely.
uh, per month. But you know, this is what allows this is what has allowed prices of the houses to go up because the monthly payment stays down, and it's just
Well, it's how they sell cars. You know, how
right,
much of a monthly payment do you want?
right,
It
yeah,
has nothing to do with how expensive the car is or whatever. You walk in, well, how much do you want to pay per month? And then they're going to show you what, based on
exactly,
the
yeah, that,
loans or whatever the rates are, what you can actually, you know, the top of that range based on that interest rate. And I would say that maybe one of the things with the home builders doing well is the fact we're having those low interest rates, but
oh, I mean,
ultimately,
people with housing sales or new home sales, and I mean, the numbers are good, although I'm afraid they are using comparisons of just a few months ago when everything was flat. But the other thing I wanted to talk about was the divergence. I've been talking about the negative divergences that we've seen of indicators. I'll just take a few here. This is the silver cross, which is the percent of stocks with the 20 EMA above the 50 EMA. And that's, if you look from this top to this down, this right where it is right now, that's 20% lower than it was this price top. We had similar, this is only 15% at the big top over here. If we're looking at the bullish percent, which is point figure buy signals, it's looking at about 20%. This Golden Cross index, that's 50 EMA above the 200 EMA. That's almost 45% lower than it was at the peak. But this is slow, but it's also being confirmed by these other two indicators.
Right.
So
I mean, they're still rising. I mean, there's certainly
right.
a chance to wiggle out of
yes,
it.
But they have been. I had some of these divergences that in this rally this month have basically evaporated. So this could go away, but right now, particularly if these indexes turn down, that's going to be not good.
Absolutely, because that'll solidify those negative divergences for sure.
Correct.
All right, I'm going to take the screen and we can talk about gold miners, and I'll start with the dollar. I don't know. I know you've been waiting for it too. It's been a while. I watched as we got a buy signal back here, but as soon as we started to turn over, we had a double top. I just thought, okay, this is it. Finally, we're going to get the breakdown in the dollar. Boy, it took its sweet time to get down here, but it finally did break down. And today it was down even further, another 1/4%. I had to go back in time to go find where our next support level would be. And when I did it, and I think I can just fudge it right here so you can see. I went back and found there's the low from one of the lows from 2019, but also the top from 2018. So that's kind of where I'm going as the next support level that the dollar has. And that, I think I put it in, yeah, $25.34 to be exact. So that's going to be the first place where I think there's some possibilities for the dollar. But I mean, when you look at this PMO, the sell signal, so far below that zero line, it's now turning down, doesn't look interested at all in decelerating, of course. So I don't know about you. Do you think it's going to hold that next support level?
No, I don't. I don't think so. We'll watch and see what happens.
Absolutely.
I drew in that rounded top, which is also head and shoulders formation. And it's one of those things you have to ignore these outliers when you have the volatility in March, really low, really high, and just if you take that away, you've got a head and shoulders pattern there.
I think Martin Pring calls them Pinocchio bars. Yeah. I always like that one. But yeah, we're already, the dollar's sliding so fast. I don't see it holding that support level either. And again, until we start seeing something better coming out of the PMO. And some might point to the RSI being really oversold now. It's gotten into that very oversold condition. But again, when you're in a bearish situation, a bearish market bias on the chart, and the 50 is below the 200 right now, that's a bearish bias. Just like you can hold overbought for a while in a bull market setup, you can hold oversold for a while in a bear market setup. So I wouldn't be looking on that as giving us any help here. And gold itself, another big breakout day today, Wednesday afternoon. And you can see that PMO gave us that especially good buy signal when it turned up above its signal line. That was a good sign. We're still seeing discounts coming in, although we don't have today's numbers on the premium discount, but that's a good sign, because when you have discounts, that's generally showing that you've got some, there's some bearishness still out there, but it's not to an extreme that I'd be worrying at this point. I think the one thing that bothers me is that the RSI is starting to get overbought, but boy, gold looks awfully good right now, and I have to kind of just go with that. Overbought conditions can last a while, when it's
Right.
when it's so bullish.
And with the dollar becoming so weak.
Oh, absolutely. That's only going to help. And of course, gold miners have just been flying. I've been especially happy with that. I know I had a diamond, wheat and precious metals that's really been doing well. I went with Newmont Mining as far as my gold miner that I decided to invest in. Very much liking the situation. We have a second flag here, a little one, and it's executed, and we're just heading straight up. And the cool thing is, the PMO isn't what I would say particularly overbought at this point in time. Certainly some of these other numbers are overbought when you've got 100%, when you've got every single component participating to this degree. That can hold up, that can hold things up for quite a while. I mean, it can keep things moving to the upside. So it is very overbought, but
So all those indicators, except for the PMO and the OBV, have finite ranges. So you can get to the top of those ranges, and there you can be stuck there. Just
right.
the same as you can be stuck on the bottom.
Absolutely.
So right now, it's certainly looking very good.
Yep, I still like them. All right, and then I was going to look quickly at the home builders. You talked about it a lot. I had pointed out on Monday that we were looking at a really nice move here on the home builders, and we'd gotten a little bit of a pullback, and now we're starting to get that breakout that PMO buy signal told us that we should be expecting. You can see that we got an OBV top higher than the previous tops, so that's a confirming action on the volume. I think the big problem we might run into is, of course, hitting that all-time high from February. I think that will be some kind of troublesome overhead resistance, but again, it's looking pretty good. And so my diamond of the week is from Monday, and it is Meritage Homes. Meritage, I know everybody pronounces it differently, but we got a PMO buy signal. It hadn't actually come in on Monday when I recommended this stock. Well, I wouldn't say recommended, when I picked it out of my scans. And we had a nice scooter going on. You could see the confirmation with actually, this should be lower. Confirmation of rising bottoms on the OBV, as well as with price. It's in a rising trend channel. My big concern was that maybe we would turn back down to test the bottom of that channel, but instead we got a really powerful breakout on MTH. So I like this, and it is my diamond of the week. If you watched my Your Daily 5, I did give out another diamond of the week, and let me see if I can go find this for you. And that would be, I'm going to just do this real quick. We have 30 seconds, but I figure it's only fair. EL Electromed, this was the one I picked for Your Daily 5 of the diamonds that I liked from the healthcare sector at that time. And you can see a nice PMO buy signal. We're getting a little bit of a flattening here. This is a rising trend channel. I think when I tested it out, it was a trend channel, not a rising wedge. So, and even if we could get that move back up to that top mark, there we go, that's 20% gain. That's all we have for today. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.